There's a couple different ways to use them. A lot of traders use them to try and trade in between, buy when it hits the lower band, sell when it hits the higher band. That's one way to use them. Another way
Welcome back, traders and investors. Having some issues with live stream here, but we are back, and we are back with one of our favorite guests, Harlan Pyan, co-founder of All About Trends. Harlan, how you doing on this Thursday morning?
Hey, you're doing all right. I'm a little bummed, though, just a little.
How come?
Just a little bummed out. Ace isn't around today.
Yeah, I don't know.
He is missing from the chat.
Yeah, Ace is MIA here. We'll have to put a search out for him there.
Maybe that's why you got problems with the Ustream.
Yeah.
No, with no Ace.
Maybe
Ace
he was holding the whole thing together, right?
Ace does hold the whole thing together. Yeah, no Ace here today, but we'll hunt him down there, see what he's doing.
Yeah, I hear you.
What's your thoughts here on the market? We had the Fed come out there yesterday, announced the official end of QE. We sell off heavily on it, bounce all the way back, end up overnight, but now giving back all those gains and kind of flirting with those lows from yesterday. What are your thoughts here on these S&P futures?
Well, you are extended to begin with, which is pretty much an understatement these days. I mean, anytime you just go, straight vertical like this, at some point you have to get a consolidation. Sure, I mean, there's a good going up and there's a bad going up. The good going ups are the ones that, 2 steps forward, 1 back, 2 steps forward, 1 back. Those are the good going ups. But when you go straight up like this, you're just wondering what's it going to be? What's the catalyst? When you have things like this and you go beelines like this, the market starts to, look for a reason to pull back. Just like we saw on the way down, when we started getting down to that 1820, 1830 level on the S&P, you knew the market was looking for any kind of reason it could to hang its hat on something, and it turned out to be a Fed head. So this shouldn't come as a surprise. Actually, it's healthy. Sure, we don't like down markets, but, the riskiest market is a market that just goes straight up, which is a great time to talk about Lake.
LAKE popping here this morning on news that their business activity increased with the Ebola crisis there. My concerns is that the Ebola crisis appears to be coming a little bit down, at least out of the mainstream media here. And are those increases in their business activity going to be sustainable if Ebola comes out of the headline news? That's my question to the CEO. If I was on the conference call or with him, that's what I would have been asking.
Good point. Yeah, real good point. So, but look at this thing. When we had this crisis, this thing just went straight up from like 10 to 20, in a heartbeat. And, 10 to 30. And, the same thing, when you were that extended, you were trading in an extreme territory and the market was looking for anything, any reason it could to look to lock some gains. And, so we had this little crisis subside. Crisis, hey, there are opportunities as long as you can get in on them. So, but then look what happened. It came right back down to earth when things subsided. So it's, same thing with what I was talking about earlier. But, you make a good point. You have to start looking at that. I mean, if you were smart enough to buy this thing in the face of fear yesterday, I mean, it was really close to the 50-day moving average. That's at like $10.16. So you were right in that zone, and markets do come back down. There was also a little support at around $10 anyway. So you knew you were in a zone. But, again, here comes a news-driven event, and the next thing you know, boom, you're right up in that 16 zone. So, how sustainable is it going to be? There's still a lot of money that was chasing this thing in the 20s, thinking it's going to 100.
Yeah.
And they're sitting there going, okay, I feel a little better now. So, but they're still stuck. There's a lot of emotional money stuck.
Yeah,
so that's going to create some resistance.
it traded up above 16 for 7, 8 trading sessions on very ridiculously heavy volume up there. So there was definitely a lot of people, probably a little guy there that gets caught in something this again. And that's the warning here. It's one thing to be a momentum trader and go with the momentum, but when it turns on these momos, it turns quickly, and especially on these little headline stock ones. I mean, look back to DGLY. That was another classic one there too. Stock just takes off on the camera on the whole St. Louis incident and takes off from $3 up to over $30, got up to 33, and then that starts coming out of the news. Ebola took over the news, and look what happens. It pulls all the way back, and it's given back 60, 70% of those gains. These things are good for a bit, but if you miss the boat, you need to admit that these are short-term trades and not long-term investments.
Right. Don't overstay your welcome. Understand that you're trading, you're trading an extreme, and you're trading, news-driven events. And, once the dust settles in those, how many times have we seen this? We see this all the time on this show, that once the dust settles, all these things come right back down to earth. So we have a saying, we don't chase buses. It's great if you're on the ride, but just make sure you have a seat the moment the music stops.
Just looking
never
at,
look a gift horse in the mouth.
Yeah, just looking at this, we were talking about this earlier on the show, and did get up over to the $16 level. Dennis, I don't know if you were able to get any more shorts on. Went to $16.85. A lot of area on the daily chart at the $16.30, $16.40 level. That was resistance. We have Harlan Pyan of All About Trends on the line. You're listening to Benzinga's Pre-Market Prep, brought to you by Charles Schwab with Joel Elconin and Dennis Dick. Harlan, so how are you going to approach today? We had a big range overnight in the index, over a 20-point range, and now we're crawling our way back here. A lot of volatility after QE. Are you looking to sell this relief rally here, or are you still trying to find things to buy?
Well, I'm more of I trade what I see type of person based off the daily charts, 6 months, with, basic technical analysis, 200-day, 50-day moving averages, Fibonacci's, things like that. So right now, you have to look at the highs of yesterday, draw a line across the highs of yesterday. Right now, that's a resistance level. If you do blow through that resistance level, then a retest of the highs could be in order. But, that's not happening unless you can get through yesterday's highs. So at least you now have what may be a marker of a resistance zone being built. So, and that helps you because it helps you define your risk when taking a trade. In addition to that, let's start looking at some stocks. There is a lot of stocks that still just got crushed. They got crushed in this whole thing, and guess what? Unlike the indexes coming right back up into the zone, a lot of issues, all they did is come right back up to prior resistance levels. So, let's take a look at how about...
We're sitting on the edge of our seats here, waiting for the ticker.
Well, look at SanDisk. If you look at a daily chart, 6 months of SanDisk, it got smashed on earnings, and all it did is come snapping right back up into levels of overhead supply.
Yeah, stock got all the way down to $80 there, and it's now come over 10 points from those lows there, up at 90 here. And if you look, Joel likes his 50% retracement. If you took the September where we were struggling at 100 and down to 80, I could do the quick math on that. 50% retracement's $90 from the 100 to the 80. So you like that, Joel? Little likes my math.
Yeah, except it was just a little. If you're gonna do it my way, you got to go from that 108.77.
Oh,
so you don't even like my math. You got to go all the way back to 108.70.
With Fibonacci, you have to use, at least for me, you have to use a markable high and a markable low, a bigger picture sense. So I can understand exactly why he's using that all-time high, because that's a printed all-time high. All right, but so use a meaningful low and a meaningful high, and then, because you can sit there and draw Fibonacci lines all day long, but the best ones, the ones that truly work, are the ones that are at key turning points and key highs and key lows. That's the quick side of it. Looking at another name, take a look at GRFS, Grifols.
What is Griffles?
ADR.
GRFS.
Oh, ADR alert, Dennis. ADR.
Uh-oh.
What
That's
a
a big level, though. That thing's sitting at that 35. I agree with you, Harlan. That looks pretty big, and it's trading back
Yeah.
down here in the pre-market. Not sure what the news is on Griffles this morning, but it's trading off almost 2.5% here. So I guess if you were playing it off that 35 yesterday, you're a happy camper today. You're almost up a point.
Well, look at its overall trend off of its, let's say, June highs. Line up all your tops from the July highs, end of July. Here you're within spitting distance of this thing. It tagged downtrend resistance. Not to mention the 50-day moving average is, right around 36. So you've got multiple levels of resistance up here. So, speaking along those themes, here's another one, HMIN. If you line up your tops off the August highs, same deal. All it's done is snap back up into resistance zones. So, we are seeing things that you can sell short. And, other names, how about URI? United Rentals. Wow, this is a crazy one.
That 110's big. Jumps right out at you. You're always the one to say, what level jumps out at you? And that 110 jumps right out at me when I look at that chart.
Yep, it's also the 50-day moving average. So, not to mention, if you look at the last 5-6 days, you hit a peak, you pulled back for 3, 4, 5 days, and then yesterday you tried to make a spike up that failed. So you could say that's a little mini double top up there over the last couple of days. So, but look at, you got the 50-day moving average, that 110. So you've got resistance there too to contend with. Another one, EQT. Line up your tops off of, let's say, end of June highs. And what do you notice? All it did is come right back to that downtrend line, not to mention the 50-day moving average zone, not to mention that overhead draw line across, let's say, 92.5. So, you got multiple levels of resistance up in here. In addition to that, EQT, well, guess what? It's got a rising bearish wedge. If you line up all your lows in October and then all your highs in October, it's a rising bearish wedge. So there's, this is what I mean by trade what you see. If you're a chartist, you're looking for specific patterns. And all these patterns are resistance patterns. Are they going to work? I don't know. Does anybody know that anything is going to work? No, nobody ever hit 18 holes in one and never will. But, that's always the risk, and you manage that risk. And the way we do it, we just don't take more than a 5% position of our overall portfolio. And that, allows us to, if you do get into trouble, it doesn't blow you up, versus taking a 20% of your portfolio in any one stock. If something goes awry, you're in deep trouble.
What do you think about earnings season so far? I know you like to, base things on the chart patterns, but, all in all, I mean, it seems like a pretty decent earnings season. Stocks have been reacting in different ways. Any take on that, or you just discount that and just let the charts tell you what to do?
Well, I try to let the charts tell me what to do. I mean, when you look at earnings, great. If you trade ahead of earnings, it's feast or famine. It's 50-50. It's, you're either going to, laugh all the way to the bank or you're going to cry. So, from that perspective, that's why people love it. For us, we're more interested if we do trade something ahead of earnings, you're looking for just trading the event, and we need to see a pattern show up for us that we can work with before we'd even consider doing that. And when we do, it's going to be a small trade to begin with. But speaking of that, when you start to look at some names that have recently topped on earnings, take a look at VDSI. If you look at VDSY, nice big pop.
SY or SI?
Victor, David, Sam, Isaac.
Okay. All right. Yep. All right. Got it up there. What are you looking at on this one?
Yeah, that's secure. If you go back to May, well, let's say go back to June, line up all your tops. What do you notice? This is a resistance zone. So while one could say it broke out of like a 6-week base into a new high, and you should get all excited because it's a breakout of a base into a new high, this is also a resistance zone.
I'm not sure I got the right thing. You said Victor, David, Sam, Indian?
Yes, sir.
Oh, okay, because the June.
Yeah, you got it.
Oh, okay. All right. I just don't see the stock being up. I haven't seen this
You're on
stock.
a real long-term chart, though, too. Take it out to the monthlies. Look at the last 4 months. You were talking about that breakout above that $17 area that just had, where it had 2 months of consolidation, September to October.
Okay. Yeah, that big move yesterday. When I see those kind of moves like that in a stock, one big day, I like to see the follow through the next day as well. Just to keep. Well, actually, this had 2 day. It had some follow through yesterday here after the gap up. Only trading down a penny here. Boy, this stock hasn't been up here, like I said, since 2008. Maybe find a seller at the $25 level. Let's talk about some of the Momo stocks here a little bit. Twitter coming back down to earth here. Street wasn't happy with the earnings. Any interest in Twitter down at this level?
Not at all. But you know what? Before earnings came out, this stock had a bearish channel off of that. One could say off the pre-earnings lows, which was, let's call it 46-ish. If you can kind of see that, you'll notice that the stock broke from the 56 right down to the 40, 46, 47. That was your first thrust down. Then it kind of did a feeble snapback bear channel rally. So the pattern was there ahead of earnings. So I have, it's not something that I really care for. So, I mean, the chart pattern is pretty busted. But if it were to put in another bear channel, yeah, I'd take a look at it.
Okay. Oh, boy, we're getting some...
What about gold here, Harlan? Let's move on here and talk about gold, because we had the big sell-off yesterday after the Fed announced that they were going to stop QE. I think some people may have expected the gold would rally if the market sold off. That did not happen. Gold sold straight off, bounced off that big $1,200 level that we had talked about for a long time. It's trading at 12.04, the November futures here this morning. What are your thoughts here on gold?
I think it's a good example of it's okay to think, but let the market confirm your thinking first. So, and with what you said yesterday, everybody thinking at the end of QE, this thing probably would have started to gain some traction. Well, that's a great thought, but the market was telling you otherwise. The fact of the matter is this thing came up to 120, GLD rather, and what's so special about it? It's downtrend resistance. When you line up your, I guess you could say your recent tops off of the July highs-ish. And it was also the 50-day moving average. And it was also overbought. So, technically speaking, there was nothing there to tell you that it was going to take off and go anywhere. So let your stocks tell you what to do. I mean, trade what you see, and all you saw, and all I saw rather, was resistance. Now, that being said, a retest of the October lows could be a support level. But, big picture, overall, it's just not where you really want to hang your hat. There will be a time, I'm sure, but, not until it can actually go up and actually stay up.
And crude oil, real quick, maybe take a look at the USO. Been a lot of volatility in that over the last few trading sessions. Kind of consolidating now, though. Or any thoughts on the USO here? Just getting a little bit of a pop, finding some resistance, though. Any takes on USO?
USO doesn't look too shabby. I mean, what jumps out at you in October here? Just draw a line right across those lows.
Right.
You hit a low, you bounce, you come back to the scene of the crime to test that low, and then what did you do? You lift it away from it. So that could be, a mini double bottom, and it could be a new support zone. So I've got nothing bad to say about it. It's not going to be a screaming trade, if it does take off, because you've got the 50-day moving average at 33.64. But 31 to 33.64 percentage-wise, there ain't nothing wrong with that.
Okay, all right. We've had Harlan Pyan on the line of All About Trends, discussing the market and the recent rally. Harlan, thanks for coming on. We'll talk to you again next week.
You bet. Thanks for having me, guys. See you later.